Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today, we'll be getting a lesson in the history of money, gold and silver, then its transformation into paper currency. In our current state of affairs is digits typed on a screen that can be increased at any moment by our big thinkers, causing massive inflation. So, where do we put our money? Where do we put this asset that is storing our past labor? Vlad Grabarskyy is the author of Introduction to Investing, a complete guide to starting your wealth building journey. He thinks the answer is commodities, and that just so happens to be our favorite subject. Vlad, thank you for coming on the show.
Thank you very much, Steve. Happy to be here.
Yes, go ahead and start off by giving us your story, how you got into commodity investing, and how that led to your book.
Sure. So I was originally born in Ukraine, and then I moved to Ireland when I was still a kid. So my background is in molecular biology. That's what I've done in college. However, very quickly I realized that that's not something that I want to do for the rest of my life. So luckily, I was able to find investing, commodities, and I actually very early realized I learned about the history of money, and that's what really got me interested in learning, getting deeper, and really digging into what can you do to make sure you don't lose your money over the long periods of time.
Yeah, what was there any inspiration with people asking you, or what drove you to get it down on paper?
I think originally it was Robert Kiyosaki. That's when I was still maybe like 15, 16. I got his book, The Rich Dad Poor Dad, and that's what kind of got me inspired. And then since then, it's been, to be honest, too many people to mention. I really start reading as many books as I can on various topics like real estate, everything. But then when I found commodities, I sort of realized that, right, that's the ideal tangible asset in the era of money printing. It's something definitely that you should own, and that's how I got going.
Okay, okay. Um, Go ahead and give us a history of money and currency.
Okay, sure. So originally, when people would produce a commodity, a crop usually, they would, in order to get another crop that they were not producing, they would exchange it with a different farmer so that both of them could get the crop. But soon they realized that it's actually much easier to have something that would represent the commodity, just simply so that you don't have to carry the bag of commodity with you all the time. And so the ideal candidate for that was gold and silver because of their metals, they're non-corrosive. So that was just the ideal option. So the original idea was just to have them to represent the commodity. But of course, the world back then was very, very dangerous. So you could get thieves, ambushes. So Chinese in the 7th century, they came up with what they called flying money, which was the paper. And the idea there again was the paper should represent the metals, which represent the commodity. So they kind of worked in tandem. And that all worked well until relatively recently, if we talk about the history, we kind of broke the whole chain. So now we still have commodities which are limited in supply. We still have the metals which are limited in supply, but the currency, because they're no longer backed up by the metal, that can just be printed completely uncontrollably. So before it was actually kind of rational to keep money in paper because they were backed up by something real. But now, of course, all investors keep some dry powder if they see a market crash or on opportunities. But it's really difficult for me to see paper as as a storage of wealth, just because of that ability to constantly print new currency. And therefore, the way I look at it is I see paper money as a hot potato, where I see what can I do with it as soon as possible. So what tangible things I can buy, just so that I don't lose all of my saved up resources, basically.
Yeah. Okay, so taking that as a baseline of history, where do you see us in current events today? So basically, what is your macro view of the world economy and financial markets as we sit today?
Okay, so I think we're in very uncertain position right now. Just because, so I've personally been in the recession camp for the past 2 years, probably. Just because if you look historically, the interest rates right now are high. So they're not high historically speaking, but they are high if we compare to the amount of debt in the system that we have. It's just, it never happened before. So the interest rates are quite high. The other thing is the lag effect is common. It should be common right now. I think on average about 18 months. So now is sort of the period where it should start kicking in. We have China that they're really slowing down as well. I think the recent numbers came out just very recently, and the real estate declined by like 7.5%, which is like huge for a country like that and for any other country really. Mm. The other thing is the unemployment in US. I think it just crossed the 36-month moving average, which historically speaking, if you look at like 80 or 70 years, that was actually all, I think it's like 100% prediction of a recession. So that we had a clear breakout not too long ago as well. So with all that being said, I am still in the recession cap, but the true answer is I don't know what's going to happen. And the way I invest, I sort of it doesn't matter to me that much because I look at long-term trends. So let's say what is going to happen in the next 10, 15, 20 years. And the way I see recessions, if we do get one, then I get another opportunity to buy more of what I like. And then if I don't get one, I just gonna, well, my teeth are gonna play out sooner, I suppose.
Yeah. There's a quote I want to pull from your book. It says, you write, "This is the most important sentence in the book, as it contains the secret to success in life. How do you become a great musician, a great actor, or a great business person? The answer is the same, by providing value to others. In investing, this is done by giving your hard earned money to a company that will use it to expand, make better products at a good price so that everyone can benefit from it, including you, the investor." And I think that's a concept that a lot of people it may get missed. Is basically what you're doing is when you're buying stocks, you're buying a piece of that company. You're literally owning a tiny slice of it. Can you go in? Can you go into that? Basically, the stock market.
Yeah, sure. So the way I really see it is if you're an entrepreneur, then you basically believe that the best person who can take care of your money is you. When you're an investor, you're basically thinking that there is someone else who can do a better job with your money than you, right? Because you're literally giving them your money. So, which of course there's nothing wrong with that because there's few tremendous opportunities in all sectors, tremendous people, and they would be better than you in their specific sector. So that's completely perfect. But yeah, I think a lot of people they do sort of forget that the whole point of investing is you're literally helping the company. You're giving them money, and they should use that money to make their company better, expand and grow, and then hopefully they'll get richer and more profitable in the process, and you will profit from that as well.
Yes, I like that a lot because I don't know anything about running an oil company, but Exxon does, and they pay me in dividends. um, you another quote. You said basically in your chapter, How to Get Started, you say, wealthy investors often use the quadrant strategy. They divide their investments into four categories and allocate approximately 25% to each category. This strategy allows them to diversify as well as capture potential positive trends in any one of these asset classes. These categories include property and land, 25%, stocks, 25%, fixed income like dividends, bonds, maybe a pension, 25%, and then cash, about 10% in physical precious metals, 25%. I like that a lot. Brent Johnson has one that's almost identical. He calls it his Four Horsemen. And having such a strong cash position, I think, is really important because if there is a recession, then we can buy these things at discounted prices.
Yeah, that's 100%. Now, the way I see it, so 25% into each sector, that's sort of ideal scenario. That's probably when you're wealthy, you have a lot of resources, because not everyone can invest in real estate, land, and really fully diversify. But I believe it's something that an investor should aim for, because sure, it's great to be in different sectors, like in stocks. You can be in copper, general stocks, gold, silver, everything, but you're still in stock. And if something happens, like if you get a huge black swan, there could be problems with your investments, and which are basically whole wealth. So I do believe that it is so important to diversify into different sectors, because then you will never get in the situation where you're out of cash, or where you're out of your portfolio is down 52 to 80%, because they will all, well, in theory, they should balance each other. But that's the idea, anyways. And what just one more other thing. I think it depends on what stage of your investing career you're in as well. So if you're just starting out and you have like a 50K portfolio, you will not be able to use this strategy, right? Because real estate would be quite problematic, especially these days. But so in that situation, you would probably be leaning more towards stocks. If you're sort of in the middle period, then you could probably diversify into all of them. And then if you're very wealthy, you would probably lean more towards the dividend payment stocks and all that kind of stuff, because you already made your money. But as a concept overall, I do think it's important to just to understand that if you own different sectors and stocks, you're not diversified.
Yeah, it's all in stocks.
Mhm.
I learned this lesson in 2008. I went a little hog wild and got caught up in the FOMO of real estate here in America, and I spent all my cash at exactly the wrong time. And then when the market crashed, and there were deals everywhere in 2012 and 2013, my brother and I were talking because he did the same thing, and we're like, man, anyone that has cash right now can retire in like 2 years. I mean, there was amazing deals on property. I mean, it was like for every 10 grand you put down, you could cash flow $400 a month. And that's insane. I mean, you pay yourself back in, what is that, 2 years? And then after that, it's just gravy. So I'm not going to make that same mistake again. And it was, if you keep 25% cash, then it'll work out. Okay. In chapter 7, you say, as an investor, I am interested in gold, silver, platinum, copper, oil and gas, uranium, and rare earths. If you want to invest in these industries, then you go on to list specific companies, of which I've heard of almost all of them, and I actually own about a third of them. So that was nice reinforcement. Let's go through your base case for each one, and let's start with gold.
Sure. So I think gold is mostly related to the fiat system, in my opinion, just simply because if dollars or any other currency can be printed uncontrollably, gold has a limited supply. This makes logical sense that the price of gold should go up in dollars. That's quite simple. Now, the other thing is, if we just look around the world, geopolitically, we're very unstable. We have two hot wars going on, possibly the third one with China and Taiwan. We don't know what's going to happen there. I also think it's a huge deal what US has done to Russian assets, because now countries like China, India, they're just looking at all this and they're thinking, if we do anything wrong that the West do not like, we can lose absolutely everything. Now, I'm not saying whether that's right or wrong, but simply from their perspective, they do not want to hold dollars, because literally dollars, they can be taken off them at any time. So that's why gold looks very interesting for them, I'm sure. And I actually believe, so we've just seen the price of gold going from like basically 2000 to 2400. There has to be one big buyer, and that buyer is probably a central bank. And we don't know for sure, but likely it is a big player, probably a company. So for gold, I see the geopolitics playing a huge role. The inflation should play a role, which is money printing. And yeah, I just do not see gold being left behind. And also the technical pattern looks absolutely fantastic. That cup and handle breakout looks absolutely great from the technical perspective. I do expect a pullback, probably to that 2100 area. But after that, I don't see a reason why gold should not go to 2800 at least, very least, in the relatively near term as well.
Yeah, I'm going to share my screen here. You got a graphic in the book that I think is pretty cool. So this is basically showing all the gold that has ever been mined on the planet, and you can put it into perspective. You can see little people here, an average size house. There's a semi truck, and that's all the gold that's ever been mined. So they can print as many paper dollars as they want, as many digits on a screen. That's all you got. So when you come back to the base, that's what you're working with.
Yeah, that's exactly it. It's very rare. So now the thing is, so all the gold that was ever mined, it is still here. It's not really being used that much in industry. But if we divide that between what 7 or 8 billion people, you're not even getting the proper ounce, you know?
True. Yeah, I did the math on this a year or two ago, and I basically took 8 million or 8 billion people, and then divided by all the tons of gold, and converted that into troy ounces, and it came out to something like 3/4 of an ounce per human on the planet. And now that's you also got to take into account that most humans on the planet own none. There's most people don't have any gold. So and most of that gold that we saw in the graphic is taken up by central banks. So that just leaves a very small amount for everyone that's left. And if you're an average guy and you've even got just a few gold ounces, you are way ahead of the game compared to everyone else.
100%. China is not giving you your gold back. They're going to keep it in the wallet.
Yeah, they created a nice arbitrage on that to soak up a bunch of them. Okay, let's get your base case for silver.
Silver is similar to gold, but also not in just from the perspective that gold or silver still acts as a monetary metal a lot, but it also acts as an industrial metal. So I was given a very close attention to the price of silver, and I was comparing it to copper and gold. And usually there are periods when it does go with copper as a base metal, but it also has periods where mostly it does go with gold. So that's good for a silver perspective because that gives you, if it gives you advantage from the monetary position and the money print, and that should bring the price of silver up. But also the industrial uses are increasing every single year. So with the AI, electrification, electric vehicles, solar panels, wind turbines, and all of that, the supply will go up. And the other thing is, Steve, silver is hated, which just makes me love it even more. Now at about $30, still no one gives a damn about it. No one thinks about silver, no one cares about it. And that's very good for investors who are currently own silver or silver mining stocks. So silver, I really, really like. I think if we do get a recession, silver will go lower than gold, just for that industrial case as well. But over the next 5, 10 years, I'm a huge bull in silver. And again, here, the technicals look fantastic. It's still cheaper than in 1980, which is kind of insane to think about. And it also has that huge cup from the 1980s as well. So yeah, I'm very interested. I love it.
Okay. How about copper?
Copper as well. There's nothing to hate about copper. It's for the same reasons: electrification, electric vehicles, AI. If we're thinking as a society that we want to, electrify poor countries, the African countries, requires tons and tons of copper. So, but copper is way more susceptible to economics than the other metals, just because they're purely used in industry. So if we do get a huge slowdown, we could see the price of copper really underperforming for a bit. From my perspective, that doesn't matter because I look at that longer term. So copper in 10, 15 years will go up almost like 100%. So yeah, I'm big bull on copper as well for the long term.
Yeah, it's something like a third of the world's population doesn't have electricity or only has access to intermediate electricity. So if they're going to change that, they're not going to do it without copper. They're not going to do it without copper. All right, let's get your take on oil and gas.
Oil and gas, I don't really have a crystal ball on the price of the actual commodities because, again, I do expect a slowdown slash recession. If that happens, they're going to go lower. However, I do own oil companies just because they're so cheap. I just cannot not own them, And also they pay some good dividends. Like if you look at Ecopetrol or Petrobras, the dividends are absolutely insane. Now they could be hit if the prices of oil go down, they will be reduced. But as a for a small percentage of a portfolio, for me, it's a short thing.
Yeah, yeah. Are those your favorite in oil and gas?
Oil and gas. Let me think. So for oil, I like there's a small company, Africa Oil. I like that one. It does have some problems now and then, but I do. And then I actually own the big guys. So I own Devon, Exxon, Chevron, a bit of Occidental as well. Um, and then the previously mentioned Ecopetrol and Petrobras just for the dividends.
Okay. And uranium.
Yeah, so uranium, I'm a big fan of. I've been in it from about 2018. Uh, Uranium is great because I don't think it can be affected by recession too much, just because uranium is barely have well one use. It does use in weapons as well, but that's small part. But mainly it's just a base stable electricity, and that's going to be in need if we get recession or not. So also because of the fundamentally we have a huge deficit. Well, not huge, but we do have a deficit, and if we look at it, it probably will increase in the near term, just because it'll take a while for the new projects from the US, Australia to kick in. Now with the problems in Niger, I don't think Global Atomic will be producing or a few other companies for a while. Um, Probably to like 2028. I'm not sure. But my bet would be not going to be anytime soon. So uranium, I'm still very bullish on. It did go up a good bit. So we are happy campers in here with uranium. But I still see that uranium can easily go to 140 just because the utilities, they are secure in those long-term contracts and the supply. I don't really see supply reaching really, getting there anytime soon. Even the Kazakhs, they have their own problems. Chemical, yeah, they're kind of diversifying a bit as well. So I do think that uranium still has a long legs to go.
Okay. And you mentioned platinum as well. How do you feel about platinum?
So for platinum, it's mainly for two reasons that I'm interested in. First of all, the ratio to gold is at the lowest ever. So never in history platinum was that much cheaper than gold, which makes me really interested, just even as a balance play. But also because the political situation. We have few countries producing most of the platinum in the world. They're very politically unstable, especially Russia. So if anything happens, absolutely anything, so Putin can just sign something tomorrow that we just ban any export of platinum, and the price would spike up. So just literally for those reasons that I have like very tiny position, but I think it has to be there just for that opportunity. Oh, for the long term, I'm not sure because yes, we are moving away from the catalytic converters into the electric cars. but I don't think that's going to affect it for the next few years. So I think platinum looks very interesting from that contrarian perspective.
Okay, and what about rare earths? I don't really study those as much as I should. What's your position on rare earths?
So I kind of rare earths and base metals, they would kind of be similar for me from the perspective that they're used in electronics and industries. And for the long term, I think with the population's going to rise, we're going to have more electric things in general with the AI and all the processing power. I just see the demand going up. And just because the commodity sector as a whole is undervalued, it's never been so cheap. It's been underinvested. If we do get the recession that I'm talking about, we will get cheaper prices, but over the next 10 to 15 years, I think they're going to go up as well. The way I invest, I would not invest into like individual companies that own, let's say, a few of those metals. I buy a company like Linus Rare Earths that kind of has a lot of them, and that's how would I play it. But again, that's for the long term as well. And if even companies like BHP and the big players, you do get exposure with them as well.
Yeah, one theme I'm hearing you consistently say is that, yeah, I'm looking 5, 10 years down the road. You're not trying
Yeah.
to make money over a weekend.
No, that's well, Steve, I won't say no to it, but I just think with my investing style, um, I suppose I've got burned a few times early on as well, similarly to your situation, where I thought that, okay, it's too cheap, it's inevitable, it's going to go up. Thankfully, I've never used leverage, but I did got to the stage where it was psychologically demanding, where I would sort of wanted to go up, but it didn't. And I'm thinking, well, it should go up. So then I sort of learned to, okay, I cannot decide when the price of a commodity should go up or down. But if I can see structurally there are reasons for the commodity or whatever to go up in price, then I'm just going to buy a little bit now, sit, relax, and enjoy. And yeah, and then with yeah, I just don't like the I have two portfolios. I have a trading portfolio where I just play in and out. Usually it's like swing trades, 1 month, few weeks, but that's more on the side. The main portfolio, I just look at trends. So that's the previously mentioned things, and I just keep buying it, keep buying it.
So, of these seven that we mentioned, gold, silver, copper, oil and gas, uranium, platinum, and rare earths, which two are you most bullish on?
Silver and uranium. That's
Oh,
an easy answer for me.
okay, that was
Uranium.
quick.
Um, yeah, so just with uranium, I think it did. So the metal or the commodity performed a lot for sure. It doesn't have to go up much higher, but the stocks did not perform. Some of the names like um, uh, energy fuels. That's it. Energy fuels. I have a big position just because I kept buying it. So the uranium price would go up, but the energy fuels would underperform. And the company is solid. Now, I think they do have a problem with they are focusing more on the other components like base metals and rare earths, all that segment. So that could potentially keep it down. But the company is very, very sound. It's gonna start producing. So yeah, I'm very interested in these kind of companies that are either on the verge of producing or just starting producing in uranium. And the price can go up much higher. So there is that possibility of the price really going up. And there is also the possibility of the companies really, or the stock really catching up as well, if we do get into that semi-mania stage. And silver is, I think that's an easy one because if you believe in gold, then you have to believe in silver. Eventually, it's just gonna overperform gold. When that's gonna happen, I don't know. Usually, gold does better at the start of the bull run. But yeah, silver is just for it was for young investors or for speculators. Silver is the best option for me. That's kind of the easiest way. Not the easiest way, but if you want to make money quickly, that's your best bet, I think. If the tide goes your way, of course.
Yeah, to catch that moment in time. Yeah, it may take 3 years from now, but you're saying when it goes, it's going to go.
Exactly.
What's your favorite silver stock?
So I segregate my portfolio in like categories. So I have the top big guys, usually the producers. Then I have in the middle, they would be sort of either pre-production or royalties. And then on the bottom, I'd have the speculation. So I'll just name a few. So for the producers, I like Equinox right now, just because they have that catalyst of that mine going into the production. Um, and I like the big guys in silver. Pan American looks interesting. I actually own Fresnillo. It's a lot of people hate it, and I'm very worried about the Mexican situation. So I do kind of worry about that. Well, to be honest, all the best stocks, silver stocks, are in Mexico, most of them. So it's very difficult to avoid the country. But yeah, and then I would also own like Newmont. I bought it when it was like 30 something, not too long ago as well. In the middle category, things like Fox royalty, Kennerland, Origin royalties, very interested in them. And then as to the speculation, Independence Gold is one, Silver Tiger, but that's in Mexico as well, so I'm kind of worried about that one. Um, Integra, Montage, but that one's already up like 130% in the last few months. But I think it's still undervalued. It still has, well, it's still, if things go well, it can still go up a lot. So, yeah, those are some of the few names. I can't pick one Steve just because they're like my kids. I love them all.
I love your book. About 80% of the questions that I get are the same questions, and they're all answered in your book. You can get your copy of the book down in the pinned comment below. Do you have any final thoughts, Vlad?
Um, so I suppose my main point is I would invite investors to always go back to fundamentals when making their financial decisions. Just keep in mind that yes, we are in the era of fiat money. You cannot really keep your savings in cash. It is really important to buy tangible assets, things that are actually real in nature. But it's also important not to go too far to that side and keep some cash in case a tremendous opportunity do come in hand.
Yeah, cash is kind of a hot potato. One nice thing about cash right now is as long as you put it in rolling 1 month treasuries, you can still get 5%. That
Yes,
moment's probably not going to last much longer, but in the meantime, you can get it.
100%.
Yeah. Well, Vlad, thank you very much for coming on the show. Get your copy of the book in the pinned comment below. $9.99 for less than $10. If I had this 3 years ago, it would have saved me hundreds of hours of time and probably tens of thousands of dollars. So well done, Vlad. I like it a lot. I felt like when I was reading it, I was like, I've wanted to write a book for the last year or so. And had I found the time to do it like you did, it would have been pretty similar to this. So I like it a lot. I think people get a lot of value out of it.
Thank you very much, Steve.
Yes, and thank you for tuning in. Share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.